Why is Warren Buffett, the world's most successful investor, the Oracle of Omaha, selling all of his real estate holdings? Could actually holding real estate be a costly mistake in today's market? What insights could we gain from what Warren Buffett is doing right now? And how can we take advantage of this possible blunder? Yes, you don't put blunder and Warren Buffett in the same sentence, but some think that Warren Buffett right now is making a dumb, diabolical, irrational decision to sell almost his total investment portfolio dealing with real estate. You see, real estate is tried and true. It goes back thousands upon thousands of years that you hold something, you let it grow. Because with real estate, we have supply and demand. Demand's always going to go up, but with real estate, supply is always going to go down. Because the more we build, the less supply we have. It's not like we're going to build another Earth. That's why Eli's trying to go to Mars. So by Warren Buffett selling his real estate today, we're going to go over if it's smart or just plain dumb. Before we get started, as always, like, subscribe, share to our channel. In real life, I'm a certified financial planner. We manage over $250 million in assets on these social media airwaves. We're giving great information like this. And on YouTube, our road to 1,000 subscribers. Yes, you got to crawl before you walk. Been on YouTube for a few months, and let's get to 1,000 subscribers. Let's talk about Warren Buffett and this real estate. Y'all ready? Lego.
And you just want to get paid. Tired of making no money mistakes. Make a payment on your bills and you still late. Yeah, Payneful profits to help you seek change. And you just want to get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Payneful profits to help you seek change. Yeah, cut the show and just listen. You want to feel empowered by making money decisions.
So, is what Warren Buffett doing diabolically crazy, or is the Oracle of Omaha, the Wizard of Wall Street, doing what investors should be doing the whole time, buying low and selling high? Well, we're going to talk about that, and we're going to see why it's viewed as Warren Buffett's blunder. The 3 reasons why, but more importantly for you and your life, how you grow your finances, how you being able to work less hours, how you be able to use your money how you want to, how you save enough money to walk your daughter down the aisle and not have to worry about paying for a wedding. Put your son in college and not bat an eye about it, how you can transform your finances. Number 1 is ditching real estate smart. You see, JP Morgan, not an endorsement, but just information. JP Morgan comes out with their study, Guides to the Market, every single quarter. And it is a synopsis of everything. How people invest, whether that be money, 1%, inflation, usually 3 to 4%, and real estate. And on average, a real estate portfolio every year goes up by, well, it depends on how you define real estate. See, Warren Buffett, he's in the big leagues. He's doing residential, but also commercial. The past 20 years, residential by itself, real estate has went up by 5.5% a year, meaning the value of our house is $100,000. The next year now is at $105,500. But commercial, a little bit different. That's when you put on your big boy pants, your big girl trousers. That is where the money is made historically in commercial. On average, the past 20 years, commercial buildings make over 10%. $100,000 building now is at $110,000. $1 million building is now at $1,100,000. Now compare that to the stock market, a little bit different. The NASDAQ the past 20 years has averaged 10.9% a year with no compounding interest. That's taking out the dividends. But with compounding interest, it's averaged 14% a year. So in both scenarios, you putting your money in the market, NASDAQ specifically, will make you more money than having it in real estate. So Buffett has a lot of commercial buildings. And what's going on right now with commercial properties? Damn. Because of technology, working from home, more people are not going into those commercial offices, so the value of commercial things are going down. That could be viewed as a smart sale. Buffett might be selling high. Other people believe that this is a diabolically dumb decision, because when you sell something, you have a gain or a loss. Why wouldn't you just hold it? Pull the cash out if you want cash, and Warren Buffett definitely does not need cash. And then buy those investments. Take a loan against your stuff. Buy more, pay off the loan, and more appreciation of your asset. Well, this is why the rich, the wealthy, and the elite always get it right. You see, they use the tax code to their advantage. In my opinion, the reason why Warren is selling is not because commercial real estate going up or down. It's not because of the stock market being better or us going into a recession. How old is Warren Buffett? Not a spring chicken. His best friend and business partner of 60 years just passed away. This, my friends, is called a legacy play. And a legacy play, when we are able to sell things and get a tax loss because of it, allows our estate to scale. You see, where I'm living, a lot more tax losses when I sell, because he has trust. So a trust has a step-up cost basis. So I bought something for $100,000. I die is worth $200,000. They sell it when it's worth $250,000. That step up in basis means I only pay $50,000 of taxes between the $250 and the $200. Without a cost basis step up, I bought it for $100. They sell it for $250. That's $150,000 of tax liability. But because the rich, the wealthy, and elite always have the step up basis, he knows that it is a better and bigger tax loss to sell things today compared to down the road. So, yes, ditching real estate might not seem like it's smart, but for Warren Buffett's position where he is today in life, from a tax standpoint, pretty genius. Not a blunder. Number 2, loss of $240 million. That's how much of a real estate portfolio he had in losses last year. What do I do with that? Some say invest it. Some say put it in cash. Some say don't sell it at all, Warren Buffett. That was a horrible decision. You know, Warren Buffett right now in his fund, his mutual fund and ETF that you could buy on the stock market. We have our clients in this fund because historically, Warren Buffett has outperformed the market. Historically. He has 70% of his money in cash. For every $100 in that fund, only $30 are actually invested at the present time. Does he know something we don't know? Warren Buffett is a contrarian, meaning when everybody goes right, he goes left. He doesn't follow the herd. You ever see sheep? What do? It's a herd mentality. They graze together. It's always that one sheep, though, that does something different. He's not following the pack. And what do? They have those dogs those Welsh Corgis. Our last dog was a Welsh Corgi, a rescue dog. Rest in peace, Sapphire. But they herd that lamb that's going astray back into the other lambs so they can herd on down the green promised land. This is not what Warren Buffett does. To the point that they say diversification is the key, and he consistently has a small, concentrated part of his money in a couple of stocks. 80% of his growth all time is based on 9 stocks. So when you say diversification is the key, Warren Buffett don't think that. He is building up a stockpile of cash, in my opinion. Yes, taking a loss of $240 million because he sees change a-coming. What is that change? In my opinion, robotics, AI, quantum computing. He missed the boat when it comes to Bitcoin. He famously said if he had all the money in the world, he still wouldn't buy $25 worth of Bitcoin. Could that be a ageist comment? Because from an age standpoint, does he get technology? He gets technology. He might not get Bitcoin. I'm a huge believer in cryptocurrency and in Bitcoin, so I think he's wrong about that. But what you cannot deny is his keen sense of opportunity, not following the herd, being that sheep that goes astray and comes back another day. So this $240 million loss of real estate, yes, that was a painful profit because he still made money. But I believe Warren Buffett is building that stockpile waiting to invest in quantum computing, AI, and robotics. And once he identifies those small companies that are about to explode, he's fin to do what he always does. Buy preferred stocks, buy 10, 15, 20, 30% of that company. And when that thing goes up, him looks like the Oracle of Omaha all over again. Number 3, sell high, buy low. That is the name of the game. If, and I say if we do have a recession, isn't it genius right now to sell our assets? We all know, or you may not know, Buffett, not the biggest fan of Trump. His business partner, Charlie, God rest his soul, definitely wasn't the biggest fan of Trump. We also know tariffs, the Americans, the country, the world, not the biggest fans of tariffs either. See, tariffs may have worked in the 1800s when it wasn't intercoastal trade, when it wasn't nations trading with each other every single day and information being passed every millisecond. In the 1800s, to get from one place to another, you had to get on a wooden boat, hope and pray you wouldn't drown, not having radar, not knowing if it's a hurricane or a tornado or what's in the sea, not knowing where an iceberg is like the Titanic. It was so tough. Think about how tough it was to go from one part of the world to another. You ain't know what was going on. Now today, everything is intertwined. So tariffs, in my opinion, the dumbest thing. It's other ways that you can make countries pay. Conversation for another day, though. With that being said, Warren Buffett just might be selling high, knowing that it is some economic downturns happening. That might be why he sold so much last year. Now, his fund underperformed the stock market. Market went up over 25%. Warren was up by 13%. Index funds almost doubled him last year because starting in May, he was selling. So all the run up for the election, he missed. All of that growth. So Warren Buffett doesn't get it right all the time. But is he selling high? thinking things will go down, and he's able to swoop in a few years from now and buy low? Or is it from a legacy standpoint, he wants to get all the tax liability because he knows when he passes away and step-up basis happens, it's going to be far less taxes to write off. So, is Warren Buffett making a blunder right now selling his real estate portfolio? I don't think so. I think it is a dumb decision to follow what Warren's doing. Real estate plus stock market investments equals wealth in our plan, the Wealth Accelerator, which is the pathway to financial freedom and growth, is a combination of the two. Grow, don't sell, borrow, refi, cash out, grow again. That is how you accumulate wealth on top of wealth on top of wealth and beat the tax code. So don't follow Warren Buffett. He has his own way to do things. He right now is very, very up there in age, and he is doing legacy plans. Does not mean you need to do the same. I know what you need to do though. Like, subscribe, share to our channel on our road to 1,000 subscribers on YouTube. We'll love your support. Comment, as always, do your research. Be blessed. Let's make some painful or painless profits together, y'all. Peace.